Hi everybody, we're here live on Instagram again today to talk about student loans. So I am bringing on financial advisor Ziad to answer any questions that you might have. Before we get started and while I wait for him to join this, the information that we'll be talking about is for general information only and is not intended to be a recommendation or specific advice to any individual. So please consult your financial advisor to figure out what's the right moves for you. So here comes Ziad. Hi, Ziad.
Hey Mia, how's it going?
Going well. So why don't you give us a short introduction about what we'll be talking about today?
Yeah, so this is episode 2 of our IG Live series that we're going to be doing for the next few weeks. Last week, we kicked it off talking about unemployment, talking about different financial planning subjects. This week, we want to talk about student loans. And so, unfortunately, more and more students have been having to take out student loans at larger amounts because college costs have just been getting so expensive over these past couple decades. And so it's a big part of a lot of people's lives, and we wanted to touch on it, the different aspects of, what to pay attention for, what details are important, and then also, what you can do afterwards and what kind of strategy you can take to make sure that you're paying those off comfortably.
For sure. And then if you have any questions while we are presenting this information, please leave all your questions in the comments and we'll try and answer them right away. So let's just get started here. I want to run through this rather than just asking you questions, more of, from start to finish. So let's say I'm an incoming freshman and I have just enrolled in EPU, so expensive private university. And my parents, they saved really well. They're really good about saving. New college was always in my future, but they were expecting me to go to a state or UC school. So now I have, $30,000-$40,000 extra that we have to pay for. And I'm going to need a loan. So what are the first things or some important details that I need to know?
First and foremost, before you even apply for a loan, always recommend trying to apply for scholarships and grants when you can. You want to reduce the amount you actually have to take out as a loan. But if you do have to apply for a loan, first you want to nail down what do I actually need to take out for that loan. Beyond that, you want to think about, is that loan public? Is that private? Try and apply for a public loan over a private loan. We'll touch on that a little bit down the line. Beyond that, whether it's a subsidized or unsubsidized loan, and of course, the interest rate on that loan. That interest rate is so important. You want to have as low of an interest rate as possible because that's going to make it a lot easier once you do graduate and start paying that off to pay off those loans.
Okay. So I just finished filing my FAFSA and I saw at the end it was like $5,000 offered in a loan. Who's offering me that loan?
Yeah, so when you apply through FAFSA, you're applying for a public loan or a federal loan. These are loans that are provided by the government rather than a private loan, which is provided through a bank or another financial institution. And so those FAFSA loans are great. You want to apply for them as much as you can before going to a bank because you do have a lot more flexibility on how you can pay that off, the kind of options that are available to you, alternative options to pay off those loans. If you do need to apply for more, first and foremost, look into Parent Plus loans. And so what Parent Plus loans are just loans, when you apply for a student loan, that loan is under your Social Security. That's your responsibility. Your parents can apply for loans for you and take on the responsibility of those loans on your behalf. And so you can pay those off, once you graduate, but it allows you as a younger student who doesn't have a big credit history or financial background, right, to qualify and get a higher loan balance before having to settle for getting a private loan from a bank.
Okay. Yeah, that sounds good. I saw that there was an option between like a subsidized or unsubsidized. I'm not really sure what that means. Can you explain that to me?
Yeah, so a subsidized loan versus unsubsidized, basically, I'll start with unsubsidized. So when you apply for an unsubsidized loan or get an unsubsidized loan, while you are studying, you're not responsible for making payments into that loan, but it will be accumulating interest as you're studying, as you're going through school. And so say you applied for a loan that was $20,000, that's going to increase and be a higher value by the time you graduate and actually have to start paying that off. Now, a subsidized loan, on the other hand, won't be accruing that interest. And so if you apply for that same $20,000 loan after you graduate from college and have to start paying that, it's still going to be $20,000. And so that's really beneficial to try and get a subsidized loan versus an unsubsidized, because then you won't, you'll be paying down a lesser amount. It'll be a lot easier to pay off. That being said, subsidized loans do have a little bit more strict requirements on what it takes to qualify for that, because they really are meant to help those people who are in times of need or in a financial hardship.
Okay, so then you talked a little bit about private loans as well. For these subsidized, unsubsidized loans, is that an option with the private loans?
So no, it's not an option. It's actually only for public loans. Private loans, they're facilitated through a bank. Like I said before, really you want to view private loans as a last resort option, because once you take out that loan, there isn't really any way to find an alternative option to pay that off. You're really stuck in that payment plan that you have, and it's hard to negotiate with them as well. Really, the only option you have there is to refinance. So try to avoid taking out private loans when you are applying for college. And if you do have them, then just try and do your best to make those payments.
Right.
Mm-hmm.
So if I got a loan for $5,000, that's great, but I still have another $25,000 that I'm gonna have to pay now that I decide to go to this private school. Can I increase the amount that they're giving me?
You should try to apply for whatever you need in terms of your loan balance when it comes to applying public. And so if you do apply through FAFSA, just do your best to apply for as much as you need. There are limits for federal loans, but generally if you're applying for $20,000 to $30,000, you should be covered by federal loans. Anything above that $30,000 limit, then $30,000 a year, that is, then you would start to look more into private loans as an option. So.
Right.
Mm-hmm.
All right. So this has all been really great information, but now I think we gotta rip the Band-Aid off and start talking about how I am repaying these loans. So, with these federal loans that we've been mainly focusing on, are there payment plans that vary at all, or how do I start to pay these off?
Yes, there are. So there's a couple different payment plans. The standard payment plan to pay off your student loans is you pay it off over 10 years, whatever interest rate that you have. With the federal loan, why it's so great to have a public loan over a private is the fact that there are these alternative payment options. So if you're having trouble making those monthly payments, you can apply for extended repayment, where instead of paying it off in 10 years, you pay it off in 15 to 20 years. You can apply for graduated repayment, where basically your initial monthly payments are going to be a lot smaller, and then they'll increase every couple of years to a larger and larger amount. And you pay that off over 10 years. And so that just gives you a little more runway to develop in your career, so you can bring in more income and have that ability to pay that off. And then there's also what's called income-based repayment. So income-based repayment is great because say you are working a job that isn't paying as well, and you're not able to afford those monthly payments, you can apply for income-based repayment. Your payments will be reduced, and you'll just make those reduced payments that are tied to the income that you're making. And actually, after 20 years, if you don't pay the loan off fully and you've been making those payments, any outstanding balance is going to be completely forgiven. And so that's great because, a lot of times people get tied down with this debt. So it's a good option to have if you are struggling with those payments. One thing to note with income-based repayment is just that any loan balance that's forgiven, so say you have $20,000 at the end of 20 years that you haven't paid off, it's forgiven. That's going to all be included as income tax for the year. So you have to pay taxes on that outstanding balance of income-based repayment. So if you are pursuing those different options, before you start thinking about those, talk to a financial advisor first. We're here to help with those, and we work with clients all the time on developing plans to make sure they can reach their goals while still being able to deal with these student loan payment plans.
Yeah, this all sounds very complicated. I think I might need a financial advisor to help me work through this. So let's say I am doing really well at my first job at college. I'm making good money, and I am able to pay back my loans, and I'm able to do it I have extra money. So am I able to do like a lump sum? Am I able to just pay more to try and, minimize the time that I have to pay off my loan?
You can. So you can pay more towards your student loans. Sometimes, especially if you have a lower interest rate, it actually might be beneficial to just keep making those consistent payments over time, using that money elsewhere to plan for other financial goals like buying a home, like planning for retirement. But that again is something that you want to talk to an advisor. Generally, if your loans are anything below 4.5%, 4%, that's a great interest rate for a loan, and you can have that money working for you a little harder elsewhere. Again, consult with your advisor before making that decision, but just something to think about.
Okay, for sure.
Yeah.
And then, current right now. So you just graduated, 4 years done. Coronavirus hits. I can't find a job, and I can't pay off my student loans. What do I do?
So if you are having trouble paying off your loans, first and foremost, try and figure out an alternative payment plan. If you have a public loan, apply for something that allows you to decrease those monthly payments. If you have a private loan, it's a little tougher. You want to try and refinance, basically get a new loan at a lower interest rate. Thankfully, with coronavirus, the CARES Act has done a great job of providing assistance for people with student loans. If you have a public loan, I'm sure you've seen your interest rates on your loans have actually gone to 0%. So they're not growing at all right now, which is great because a lot of younger professionals especially have been unfortunately losing jobs and not bringing in an income. And so you don't have to, that's one less burden to worry about for now. Big thing about that 0%, as of now, that's going to end on September 30th. And so if you are relying on that interest to not be growing, pay attention to that and pay attention to that date, September 30th. Obviously, there is potential government stimulus coming to help with that, but you don't want to count on it for sure. In terms of refinancing your private loans, the big thing with this is getting your credit score as high as possible and having a very quote unquote attractive financial resume where you can better qualify for these loans. If you're having trouble qualifying with the bank that you do work at, think about working with some newer financial institutions. One institution that I've worked on with a couple clients is SoFi. They do a great job of letting you qualify and also providing competitive and lower interest rates, as well as some other digital institutions as well.
Awesome. Thank you for answering all of these questions. This has been really helpful for me, and I hope that for everybody watching, this has been really helpful for you as well. I want to open up the floor if anybody watching has any questions that they would like us to answer. You can go ahead and ask them right now. Or you can always DM us later and DM us ideas on what you would like our next Instagram Live next Thursday at 1 p.m. to be about. All right. Well, Ziad, thank you so much once again for running through all of this with me. I hope to see all of you watching back here again next Thursday.
Yeah, thank you. Thank you to everyone who's listened. Like I said before, if you do have student loans and are looking for help, reach out to us. We help create strategies to pay that off while also planning for whatever long-term goals that you have beyond that. We are comprehensive financial advisors, and the great thing about our work is that we actually have programs that don't have any minimum. So if you're afraid to talk to us because you think, I don't have enough money to work with an advisor, that's not the case here. Please reach out if you're looking for help. And yeah, we'll catch you guys next week.
Yes, and what's your email, Ziad, if someone wants to reach out to you?
My email is Ziad, Z-I-A-D, @GerberKawasaki.com. Reach out to me through there. DM me on Instagram. Give me a call if you have my number. Otherwise, reach out via email. That's great.
Yes, or call the office 310-441-9393.
Okay.
All right.
Thanks, Mia. Thanks for having me on. Yeah. All right. Bye.
Bye.